In this presentation, I am going to describe the option strategy builder, the option strategy software what we have recently developed, and also I will be discussing many beautiful features of the option strategic trading. Option strategic trading not only helps you for protecting the money, it also helps you to speculate in a limited extent and to get benefit out of the speculations. So I will be demonstrating a live trade using this software. Before I should go for those live trade, I wish to inform this software of option strategic formation has great potentiality for advanced traders. When I say about advanced trader, that means I assume the trader will be knowing the basics of the call options, put options, option Greeks. So these are the basics of options. If someone knows, then he can easily cope with this advanced trading software. So during my presentation, I will be discussing what is this option strategy software, what is option strategy, how to form an option strategy, and how to speculate in the option strategy. All this calculation, all these things will happen in a very mathematical, concrete way. So let me start my discussion with what is this software is. The look and feel of the software is pretty simple. It has the instruments. You can choose the index future, stock future, any of this instrument. Since we have given the equity bucket, equity we do not have. For the data linking, we have given equity, currency future and all. But suppose if you wish to do the form a option strategy, then you don't need to load this instrument first. So first I am selecting index future. Its expiry is already loaded here, 3 months expiry is there. Then I need to load the data. Once my data is loading, I will be getting that what percentage of my data is loaded. Once the data load is completed, then the last traded price which is being retrieved by the software will be displaying here, and I will be getting one icon called data loaded successfully. This window will pop up. I will just close it off. Then here all my call strikes is being loaded. Here all my put strikes is being loaded. So the tradable strikes of the call and put options are being loaded, and I have given a 5-leg option strategy builder. Means 5 different call and put options and their actions of buy and sell you can able to select from this. You also can able to specify how many days you wish to hold the trade. So this is the look and feel of the software. We will be using this software for forming an option strategy. So this is how the software looks. What is the benefits of the software? This gives you the performance of option strategy at different price intervals, and this price intervals is being derived using the volatility, which is a concept developed by Smart Finance. This volatility concept says you within a specific time period how much price fluctuations you may encounter in a particular counter. And this software also has an enhanced Greek analyzer and Greek scanner. So these two features also embedded in this software. It has net Greek analyzer. This is the advanced Greek analyzer and the Greek scanner. So I will be also demonstrating how to use those two parameters for forming an option strategy. You can form any kind of option strategy, from basic strategy like saddle, strangle, guards, condor, iron condor, to any advanced hybrid option strategy till 5 legs. 5 legs means 5 different call and put options with their respective actions, buy and sell, you can form. And this software will reduce your workload for deriving the Greek neutral or the net Greek zero. So this is also one of the features of the software. This also I am going to demonstrate. This software also comes with the programmed edition of our 22 option strategy, innovated by me, and it is being pictured in my book called Master's Key to Futures and Options. So this is also a programmed features of these 22 strategies we are going to build in this software. So this is about the software. I will be demonstrating all those features of the software. Before that, let me explain something based on the theoretical concept of option strategy. What is an option strategy? Option strategy is formed with the multiple buy sell of different strike, call and put option. This is what the very basic definition of the option strategy. You may include a future long or short along with the option also. So this combination of buying and selling different strikes, call option, put option, or same strike, call option, put option with different action of buy and sell is known as the strategy. Then you may ask me, can anyone buy any strike, call option and sell any strike, put option or call option, whether it will be called as a strategy? Yes, it can be called as a strategy. Though it is missing the part of objectiveness of the strategy, however, any foolish buy or sell action of a particular strike or different strike may be known as a option strategy. But it will be missing the objective of the strategy. That means why I am forming this strategy. That means what is the benefit I am going to get out of the strategy. That means when I am going to get this profit or loss. So all these objectives are missing if you are blindly buying any call option or selling any call option or buying a put option, call option together, or buying a put option in multiple lots and call option in multiple lots. So the idea of forming an option strategy to make any one of the option Greek to neutral or zero. If you make any one of the option Greeks to neutral or zero, then that is known as your Greek neutral strategy. There your objective is being pictured or the objective is being given priority for forming the strategy. For example, if I am saying that give me a delta neutral strategy or delta zero strategy, I will buy certain call option, certain put option, sell call option, put option, whatever may be the possible way. I want to reduce the delta to a near zero level. That means I will form a strategy with a delta zero, means anything happens in the pricing part. Means if the stock goes up by 10% or if it fallen down by 10%, I will not be impacted and my money should give me the profit. My money should give me the profit in a stipulated time period. That time period also I will fix. That time period market will not fix. So the objective of forming a delta zero strategy is to gain money from any kind of price fluctuations in either direction in that particular stipulated time period. Same way we have gamma, we have theta, theta associated with time value, vega associated with the volatility, gamma associated with how the delta will behave according to the price changes in the underlying asset. So any one Greek you should make it zero or bring it to neutral. Neutral doesn't mean zero. Neutral means there is a specific risk level, there is a specific risk weightage we can still carry on those trades. That also I'll be explaining. So I have given a simple example here. Assume I am buying a 5,700 call option and put option of Nifty by paying a premium of 150 each one lot. Theoretically, if you are learning the options from the theoretical point of view from any book, then the writer will say that this strategy will become break-even at 6,000 in the upper direction, because 150 you have paid the premium, so sum comes to 300. So 300, if I'll add it to 5,700, till 6,000 Nifty goes, I'll not make any profit or any loss, means break-even. Beyond that, I'll make profit. This 300 point, if I'll subtract from 5,700, I am coming to 5,400. So till 5,400 in downside, I'll be at break-even. Means I'll not make any profit or no, neither profit nor loss. But this is not a best case scenario for a trader. It doesn't make any sense for a trader. Traders' requirement is different. As a trader, my requirement is different. I do not rely on these theoretical aspects. So let me modify my requirement. Say I am buying this 5,700 call option and put option Nifty at a specified premium of 150 each, one lot. And for a maximum holding period of 3 days, I am going to change my requirement. Yes, let me buy this, but I am going to hold maximum 3 days. Then my analysis become complex. I need some complex answers for my question. Means what will be the anticipated level for the Nifty in the 3 days period? In the coming 3 days period, what will be the anticipated levels for the Nifty? In either side movement, what will be the net profit and net loss my strategy can give? These are the questions I need answer before I enter the trade, because I changed my requirement. I am going to hold it for 3 days. During this 3 days period, give me a level where the Nifty is anticipated to move, either in the upside or in the downside. If it moves according to my anticipated direction, what will be the net profit and net losses I will get? What is the net Greek of my strategy now? Whether it is Greek neutral, Greek positive, Greek negative, any delta is positive, LD delta is negative. What is the fate of my Greek? So these are the answers I need for my strategy, and these are the answers are very complex and powerful and means answers for a option trader. Any option trader needs these answers. So our software is going to solve you that requirement. I am going to demonstrate that thing. Whatever the examples I have given, we are recording this event on the 30th September. 30th September at the fag end of the day around 4:37. So let me 30th September 2013, we are recording this event, and let me see the things what I have discussed, how far it is going to help me to decide upon a trade. So same example I am going to take. Data has got loaded successfully. Then call option 5,700, same 5,700. I need the complex answer. I am going to buy one lot. I am going to buy a put option of 5,700 also. That is to one lot. That is to one lot. That is I am going to buy one lot. The premium which it was quoting at the closing hour is 211 and 137. I need to hold this trade for 3 days period. So I have given all the inputs, whatever is required by this strategy. I need to hit the button calculate. During this 3 days period, my Nifty is going to touch the level of 5829 or 5724. This is the first level. If it is being penetrated, then during this 3 days period, I may expect maximum 6104. These are all 1 levels which is being specified as for the volatility. If you cross this 5829, you have all chances to toss this 5861. If you cross this, you will toss 5880. If you cross this, you will toss to 5922. If you cross this, you will come down to 5947. So this says, if you are buying this thing at 211 and 137, your net investment is 17,000. At 5829 level, you will be gaining 615. At 5861, you will be gaining 1238. Like this way, your gain is going to expand if you are going to touch 6105, which is the expanded target set during this 3 days period. As for volatility, your gain may stand at 8,610. In contrast, if you are going to fall below 5724 and started falling till 5449, your losses also is going to expand, and it is in the proportion of initial couple of days it will be in the sub-1000 level, and at 5500 level you will be at a very small profit of 433. So this is what the performance of this strategy at the different level. So I need to know, I got the first answer of my question. During this 3 days period where I am expecting the Nifty upward breakout above 5829 may bring the Nifty to 5922 and 6104. Downward breakout below 5724 can bring the Nifty to 5449. In between, these are the levels it may test, and it may halt in any one of these levels during this 3 days period. It may be at the first level also, it may halt. 724 to 829 it may speculate also. It may oscillate between 861 and 829 also. So these are the answers, first answer I got for the underlying asset movement. Second answer I got, in either side movement, what will be my net profit and net loss of my strategy? Now third answer I want, what is the net Greek of my strategy now? Net Greek, if I'll just hit this button, it is telling you at this particular point your net delta is 0.27 at this last traded price. Gamma is this one, Vega is this much, Theta is this much, and Omega is this much. All Greeks at these levels. Once we are moving in the upward direction, my delta is going on increasing and it can attain 0.73. I do recall the call options delta maximum goes to +1 and put options delta maximum goes to -1. Future delta is always 1. So this is how my delta will behave, and accordingly my profit and loss also will change. In one click of button, you will be knowing that what is the net delta. For example, I have taken this and my net delta is 0.27. 0.27. I do not want to carry a positive delta of 0.27. I do not want to carry that positive delta of 0.27. I need a delta to be 0 while forming this strategy. This is also possible. So here you have just taken net delta is positive 0.27. I'm just going for a Greek scanner. I'll just hit on this button. So I'll get the Greeks of all options currently available. So I need a 0.27 Greek. So which is coming to 5,500 and put at 86.9. 5,550 put option. If I am buying a 5,550 put option, one lot, then my Greek will reduce to 0. So I have chosen put 5,550 by one lot, and now I recalculate this thing. So what happens? I brought the delta to 0. So if I just go for the net Greek analysis now, my net Greek analysis, which was 0.27, has reduced to 0.0288, which is significantly almost equal to the level of 0. You cannot derive exactly 0, but still you have brought into the near 0 level. By this process, what happens? Though your profitability in the upward direction has reduced a bit, but the liability also being reduced here, and any move above 6046 you are gaining 3500, any fall below 5508 also you are gaining 3000. So you brought that levels to 323295 and 3546 by reducing the delta to 0 level. So this is the simplest way you can reduce the delta. You bought one put option of 550, you bought a put option of 5700, you bought a call option of 5700, maximum holding period you kept it as 3, and you derived a delta 0 strategy, almost delta 0 strategy, and by that process you are anticipating if the price goes to 6046 I will be winning 3546. If the price fallen down to 5508 I will be winning 3295. However, all these options are being bought, the time value neutralness is not being derived. So time value neutralness is not being derived. So only we have derived as for the delta 0 aspects. Fine. So this is how the tool will help you for deriving the option strategies. Now let me move to a specific strategy, which is a real strategy, which is being initiated by me, how to speculate in an option strategy. The part closure trick or the part closure method is applied for making speculative trades in the option strategy. Once the strategy enter into the profit zone, that time only you can do it. So I did in this order. So I derived the time value also. I have just neutralized. I have also neutralized certain things. I have taken this strategy. I bought Axis Bank future. This is my real contract notes. Real contract notes. My name features. My name is here. My address, office address is here. PAN number also is there. This is 26/9/2013. For October series, I have initiated this strategy. I bought Axis Bank future. Axis Bank future. I bought 950 put option of the Axis Bank. Here 3 lots and here is 1 lot. So 4 lots. An average price of around 32. I sold a 1100 call option at 51. I bought a 1250 call option at 14 rupees. So this is the trades I have initiated. So I'll just summarize here in an Excel sheet. This is what I did. So this is what I did. So I bought the future at 1046, 1 lot. I sold a call option at 51, 1 lot, bought 950 put options, 4 lots, and bought a 1250 call option, 1 lot. It is almost 0, means 0.0003, so 3 decimal points beyond it was 3. So near delta 0 level I have brought it. After bringing these things, if you just see, my strategy has entered to the profit today, which is on the 30th September, when this has comes down to 1013, and this has come down to almost to 32 level. This has gone to 43 level, and this has been trading at 8 rupees level. It was pretty profit level of 4 to 5,000 rupees was there. So what the part closure strategy I have initiated here. The 1100 call option what I have sold at 51, I bought it back, I closed this one, and I close close one lot of this. Keeping all three are open, I closed these two things. And I have just closed these two things and I was waiting. This also trade contract note. Let us look on this trade contract note. So this trade contract note also I am going to show you. So take this one, wait. So this is what I did. I closed the trade, sold the 950 put option at 44, and simultaneously I bought it back around 41 to 44. So you can say here the timing 10:47 I sold it off, 3:17 I bought it back. Same way this one also, let me see this one. So this one also 31.50, 34.25. So I have 957, I have the sold call option, I bought it back, and 316 I again sold it back. So by this process, this has given me a intraday gain of 687, and the 687, and the other trade also would have given me around 800 rupees. So 812, this has given me 812. So by this process, the intraday speculation, still the strategy is there. So it has given me 1499 rupees gain. After my brokerages and taxes, definitely 1200 to 1300 will be left out in this particular trade. So this is how you should do a limited oscillation or limited speculation on this trade. So why I have not closed this trade? So you must ask me here. So I have taken it at around 32. I am 43. So 10 rupees. So 40 rupees is gain here. 4 lots. And so this comes to 32, means almost 19 rupees is the gain here. So 46 to 13, if I can say here, this minus 13. So this is 33 rupees I have lost. And here too I have just, if I just to take it in this ratio, I have lost 6, and net I am making a point of 20 points. So 5,000 rupees I am gaining. So why I should not close this trade? So see, by closing these two positions in the initial hour of the trade, if I did not get any chances to re-enter, what is going to happen? This 8 rupees may come down to 0, but the major component, which is 32 here, 3 lots remaining, this will appreciate to a great extent. So my 5,000 is going to grow from this point. It is not going to fall from this point, even though if I disturbs these two parts. Even though if I disturbs these two things and I closes these two things, still then my strategy is not going to fall. However, for a period of 10 days, I have expected certain things on the Axis Bank. Say I am expecting around 920 level here, and if in the upper side it gives, then it will be 1150 here. So let me wait for this level. Once it comes, I'll get some good money. So certainly from 1020 to 920, 100 rupees, another 5-6% of fall in a day may not happen, may happen also, but nothing wrong if I can speculate in a limited extent in these two profit-making positions, and if I speculate and re-enter for multiple times also, it is not wrong. So this is how you can speculate on this option strategy builder. One more trade also I am going to show you today. Assume this is the thing, we have one live trade and one more live trade also I am going to show you today. Say we have taken, this is the analysis I have taken. option strategy builder, Bank Nifty I have taken, and this is at the time of 30th today, 3 o'clock 5 minutes this reading is being taken. I am selling a Bank Nifty future, buying 10,500 call option 1 lot, 10,500 call option 4 lots and 10,000 call option 1 lot. Holding day for 2 days. For these 2 days I am going to estimate. So by this process what I have found out, during this period of 2 days, Bank Nifty may move to 5858, 5935 or 10,084. If it goes to this level, I will be making a profit of 9,000. Certainly if it falls from 9,730 and during this three days period, if it at least has achieved the third target level to 9,375, I'll be losing some 1,020. And with this anticipation, even though if it comes to 8,900, I'll be losing 4,000. Even though if it comes to 9,500, I'll be losing 600 rupees. So any move above 5858 is going to award me 3,600. Any fall below 9,601 is going to take some few hundreds. With this level, if fortunately it goes to 10,500, my profitability is very, very high. Unfortunately, if it's fallen down to 8,900, then also I have some profitability. So by this simulation process, I have taken this strategy for a 2 days perspective view. So let me look into the Greeks part. What is the Greeks here? What is the Greeks here? The time it is being initiated, same time, if I'll just take a look at the Greeks, my delta is at 0.6 level. If the delta comes to 0.6 to minus 0.48, 0.6 positive to minus 0.46, then also I'll have a profit of 4,000 rupees. If my delta from 0.6 to 2, if it moves, then I'll be having a plus 2 level. If it goes to, then I'll have a profitability of 27,000. However, my delta, if it approaches towards 1, then also I have a target 2 level, then also target 2 level, then also I have 6,000 rupees profit. From 0.6, if it decays by 50% and come down to 0.27, I'll have a very minimal loss of near about 1,000. So risk rewards looks very promising. Any trend reversal also gives me the profit. So with this view, also this strategy is being taken by me in this day. So I have also taken this strategy for the day. I am going to take this strategy for the day and say I am just going for Bank Nifty. I have told you 10,000 call option, 10,500 call option, 4 lots, 1 lot and 1 future is being sold, and rather I have just entered to a slightly higher value 182 and 354, and I also sold the future at 767, 9767. So slightly higher value I have got in that. So I have just entered with that, with the perspective that it can give me the profit in either case, though my delta is quite high level at 0.6 net delta. However, I have managed the Vega well in this. So you can say the Vega from 36 to 46 or 36 to 16. So either cases I am making the profit. So fall in the volatility also brings me the profit. Rise in the volatility also is going to bring me the profit. So for that anticipation also this strategy is being taken. So strategy builder, all in all, I can say any 5-leg strategy, you can form with any actions of buy and sell. It can give you the real targets levels in your holding period and your anticipated profits and losses at that holding period. It can give you the net Greek analysis. Also Greek scanner which will help you to form a Greek neutral strategy. So what the trader is getting in this product? So you will be getting a book on futures and options written by me, and this has 22 option trading techniques in it. It covers most of the basic option trading concepts. Specifically for this product, there will be a pre-recorded 3 hours pre-recorded lectures will be there to understand what is Greek, what is option price model, how to form this option strategies, what are the strategies. On this, some 3 to 4 hours of training materials will be given to you. And for the 3 months period, weekly, once or twice, you will be given with the email trainings by me, wherein I will be simulating specific strategy with some pre-objective thoughts in my mind, or with I'll set an objective for the month or for the week. Using that objective, I'll be forming a strategy using this tool. So this will be being recorded, and this will be emailed to all the buyers, and you can have an interaction with me through emails to clarify on certain things on that particular strategy. So all these 3 things will come in this product. For the price information, you can call to our Chennai office as 9840348971. We have the sales franchises. Those who have our goods, they can deliver you in those cities, but they do not have the subject info. They have the goods they can give you. They give you the price info, but any subject related queries you need to put the email. There Mr. Manish from Gujarat, 9601348535. Mr. Paresh and Mrs. Namita at Mumbai. Their numbers are 96190455514, 81080662120. So these are the sales points we have. These are the people who are associated with us. You can contact them for price related information.